It was a day of strong resilience for Indian markets, which remained range-bound despite global odds. For the entire trading session, Nifty moved in a very well-defined narrow band of just 40 points, and ahead of expiry, surprise, surprise, the volatility was missing, and global and local traders remained completely on sidelines ahead of that important EU meeting. Even though the leadership from the market today was missing, the most redeeming feature of today's market action was the market breadth. All major sectors today have managed to close in the green, and volumes remained low despite Thursday's expiry. Infosys was the biggest gainer on the Nifty, and Manappuram Finance once again was the top traded counter on both the exchanges. So what's the way forward for Indian markets from these levels? Let's discuss that. Let's debate that with our experts. To talk market technicals, Sandeep Wagle, and to talk market fundamentals, Mehrbon Irani of Nirmal Bang. Gentlemen, good evening to you. Thank you for joining us. Sandeep Wagle, today's market action reminds me of a very old proverb, which is this the calm before the storm?
Well, for the last one whole week, we have been a one green, one red, one green, one red. I think last week it was some two greens, then one red. So I don't read too much into this. Tomorrow you will again have a 50-70 points movement within a narrow band. And I think gone are those days when the expiry used to be highly volatile and you used to have 100 points. I remember many years back. I really don't think that will happen. We will be in the band of 52 on the upside, 51 on the downside. That also broadly I am saying it could be lower than that. So till the expiry is over, I really don't want to take a call. But the bias remains upside, and that too specifically in mid caps. I mean, I would like to just add one thing to this, that there are stock specific opportunities where one can make money on the long side, but more so in mid caps.
We'll discuss some of those stocks, but Mehrbon, first the big picture from you. Why are we stuck in a range?
I don't think so, Nikunj, we are in a range, honestly. I think over the last 2-3 weeks, I think I have been stating that it's the time to become optimistic without going overboard. I think whole lot of negativism, whole lot of pessimism. You talk to anybody on the street, be it a fund manager, be it a research guy, I think they're laughing when you talk of government trying to take steps. So people talking negative about Europe. But if you see the way the markets have gone up over a period of time from 4,800 to the present level, with quite a few stocks scoring decent gains, I now have come to the stage where I feel that optimism has now got built into the market. So if we have a minor correction, so be it. And I'm not ruling it out. I think we are going to talk more and more, unfortunately more and more, because all brokerage houses have to do their jobs every passing day of preparing a morning note. People will talk of the monsoon, which could be a drag on the markets. Then there are a lot of expectations now coming out of the EU summit. So if there is a failure over there of some kind, we could have a correction in place. So I would wait for a small fall in the market to go ahead and buy. But on the whole, I feel that India has become a market where I feel that people now should become optimistic and start buying into the market without going overboard. Because I personally feel 48,000-49,000 could be the bottom for the market now.
But the stock, Sandeep Wagle, which I want to discuss at length is Manappuram Finance. I know we've discussed this on a daily basis, but hard to ignore this one. Up 30% in 3 days, top traded counter, moving up on strong delivery based buying. Do you think Manappuram Finance is looking good for another 10% from these levels?
Well, a 32 rupees stock, 3 rupees can happen in a day, which has been happening for the last 3 days if I am not wrong. And I think over the last 2 days we have been liking this stock. But then very honestly, when a stock has moved from 22, 23 to 32 levels, the risk increases. Yes, there is some more upside. The momentum is there. The direction is very clearly up. But then you never know if some wrong news comes in or some news comes in where it goes into a sell. Again, it will fall also in the same way. So that is the risk one has to take. And if somebody is willing to take that punt, yes, a 10 to 20% increase can't be ruled out.
What about Hindustan Motors, Sandeep Wagle? Similar chart pattern, up 20% on Tuesday, up 10% today, up 7% on Monday.
Well, it has moved up too much in the sense that from 8 rupees it is already at 13 rupees. Now you count how much. Pattern wise, yes, you are right. There is still some more upside. It can easily go to 16, 16 and a half, 17. A 4 rupees on a 13 rupee stock means quite a lot. So I would say that both are similar, but if you ask me chart-wise, pattern-wise, the first one, that is Manappuram, is better.
Mehrbon, there is an increasing consensus on the street that it's time to sell consumer names, it's time to buy infra names. Are you with the consensus, or you still like your good old Colgates and Nestle's of the world?
I definitely like them, and if I were an investor, I would remain invested in them, because I always believe that this type of stocks, you sell them off and wait for a correction. The correction comes, but you cannot buy them. 9 out of 10 investors don't buy them. So I would like to remain invested in them. But what you said has a valid point over here. I think these stocks have outperformed the broader market by a very wide margin, Nikunj. Are they expensive? The answer is yes. As I mentioned earlier, I think the headwind for India is going to be the monsoon, and we are going to discuss it every passing day now. So if there is a further delay in the monsoon of any kind, or if predictions come monsoons are not going to be good, you could have the FMCGs reacting. So as I mentioned earlier, I think this was the month possibly for oil marketing companies and oil companies on the whole. The next month could be the turn of IT companies moving up and FMCG stocks reacting. So at the present level, even from a trading or an investment angle, I'm not in a hurry to buy any FMCG stocks right now. The stock like a Nestle can perform because it largely depends on the urban market, whereas the lever could come down. So here and there could be a small correction in FMCG stocks, and I would use the correction to possibly buy into the market. I'm not in a hurry right now because they are on the whole expensive, though I'm not asking investors to sell it up, because as I mentioned earlier, not many can go and buy the stock if it comes down by 4-5%.
Sandeep, what do you make of Infosys Technologies and the technical setup there?
Well, some more trading upside, Nikunj, to the tune of 25-20, 25-40, which is a 50-60 point upside. If you talk of that, I am with you, but I don't read into it as a 10-12% move. I don't think so. I would go with the TCS for a target of 1290, 1300 rather than going with Infosys based on the chart.
Melbourne, isn't it quite ironical that rupees under pressure and large cap IT stocks, they're not outperforming at all?
No, Nikunj, I think Infosys is my top pick. I think even on large caps across the board, I think Infosys, if you had asked me, I think I would have selected Infosys, and I've been positive on it for quite some time. For the simple reason that post what has happened at Infosys last quarter numbers, I think market has virtually had a sell-off as far as Infosys goes, and people have gone and parked themselves into TCS and maybe SCL Technologies number 2. So I think Infosys, because it's become a little bit under-owned relatively, I've started liking it. And if you compare what rupee was last year with what rupee is this year, I think there should be a pleasant surprise as far as Infosys numbers goes. So I think Infosys, if you don't like for specific reasons, I think the next best bet in the IT segment would be Wipro. But the valuation at which both these stocks are going, I think they are relatively cheaper as compared to possibly TCS and SCL Technologies. So I'm quite comfortable with the way Infosys has moved today, and I will not be surprised if it goes up further from here.
So what kind of price targets, Mervun, you're working with when it comes to Infi?
I think over the next 3 quarters, we are having a target of over 3,000 for the stock.
Okay. ICICI Bank held out. It is at 850 rupees. Now, there is a compelling argument that in the near term, you should switch out of HDFC Bank and move to ICICI Bank. Mervun, would you agree with my assessment that HDFC Bank is a good bank but expensive? ICICI Bank is making a comeback and is attractively priced.
Nikunj, I've been very vocal in always recommending HDFC Bank for many quarters now. So to say that people should exit HDFC Bank, answer is no. It's expensive. I'm not saying it's not expensive. And yes, if we are expecting the markets to move further from here, from a trading angle also, I think ICICI Bank is definitely better as a stock as compared to HDFC Bank. But if somebody has HDFC Bank in their portfolio, I am quite sure one can sleep very soundly, possibly the best bank management possible in this country, along with IndusInd Bank. So I think ICICI Bank from a trading angle, yes, I think the stock needs to perform. It started performing. It can go up a little bit more, and the management has worked a lot on its balance sheet. So I think, yes, ICICI Bank is a decent choice, I would say. But I like HDFC Bank still. And I think the best 2 stocks to buy on the banking pack is IndusInd Bank and Jammu and Kashmir Bank.
Sandeep Bagli, 2 stocks. One Nifty 50 stock, which is IDFC. The other one is a slightly off-center stock, Orchid Chemicals. Now, the similarity here is that they both went up, and they both went up today on strong volumes.
Nikunj, yes, and I'm liking both as trading buys, IDFC also and Orchid Chemicals also. But if you ask me to choose between the two, at this point in time, IDFC is clearing a lot of resistance areas. So I would talk of an IDFC, and I would talk of a price target of somewhere around 144, 145 at a current level of 135 can be bought on declines to 133 or so, stop loss of a little below 130, and I would play for a 144, 145 target over the next week or 2.
If I look at momentum stocks, most of the momentum stocks are up about 30 to 40% from their recent 52-week lows. But Suzlon, even though the stock today appreciated by 2% plus, it is threatening to go below its 52-week low. The 52-week low for Suzlon is 17 rupees. Today it should drop at about 18 rupees. Sandeep Baglia, what is technically the future for Suzlon? Because it is the only large cap momentum stock which is threatening to go to a new low.
Well, you may not see too much of a downside because it is making a kind of a base at 16.5, 1680, 17. It is currently at 1810. So that 17 levels may be held on to, but till it breaks 22, 23 with volumes and manages to stay above that, say about 24 levels, a move till 30 cannot be expected. I mean, I would rule that out, and I think that would be far-fetched. So whatever rallies or whatever up moves, smaller up moves do come in, they will get sold into. Possibly 16, 17 on the downside may be held for some time with the market if the market is holding on. That may not be broken. But I really don't see a great future. I would talk of a movement in a band of 16, 17 on the downside, 19, 20 on the upside. If one really wants to play within that, I really don't think that would make great sense.
Perbun, what is driving Asian Paints? Very expensive, on the record, off the record, we've discussed the stock. But I'm pleasantly surprised with the price action.
I think at 3,200, well, I felt that if the stock reacts, one should be buying, and I missed out on it. At 3,400, we bought it for our client with a target of 4,100 over the next 12 months. So I think Nikunj at 3,800, 3,900, despite the fact that I have the highest of respect for this company, its products, the management, I think the stock is expensive. So I think this is what the market is coming down to. Quite a few of the stocks will be available at more or less the same rates, even if we move up 10% from here as far as the Nifty goes. I think I see it very difficult for Asian Paints to cross 4,100 over the next 2 or 3 quarters. So I think maybe at around 4,000, 4,100, if an investor feels that he is in a position to buy it again at lower levels, he should be looking at exiting from this stock, honestly.